Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be looking at the ROI versus the days since the halving for all three halvings. So if you guys like the content, please go ahead and subscribe to the channel. Give the video a thumbs up. Also, if you want to discuss these charts, you can check out the Telegram channel, which you can see here and find a link to in the description below. We have almost 3,600 people. It's a pretty active group, so I would love to have you guys join. And if you want access to the premium list, then you can find that at intothecryptoverse.com. So let's go ahead and jump in. So what we have here is the return on investment, or ROI, on a logarithmic scale. So note that each major tick to major tick is 10x. So let that sink in if you're unfamiliar with logarithmic scales. So what you can see is based on the halving, not the market cycle bottom. So if you measure it from the market cycle bottom, the ROI would be different. But the point of this chart is to say, okay, well, what if you purchase Bitcoin on the date of the halving? Because naturally, a lot of people do purchase their very first Bitcoin on that day. And the reason for this is because it tends to make its way around various news channels, and there's a lot of excitement surrounding Bitcoin. It typically has seen a surge in price from the last few months going into the halving. So this tends to be a good time in terms of, say, Bitcoin sentiment. So since a lot of people are buying Bitcoin around the halving, it makes sense to sometimes measure the ROI from there. Because realistically speaking, most people aren't buying Bitcoin at the market cycle bottom. So currently that would be $3,100. So most people aren't actually purchasing it at that price. So what we have here is the ROI versus the days since the halving. The dashed blue line is your break-even point. So this is essentially saying, okay, well, if the price, if 10 to the 0 is 1, so this is what you would want to, this would be your ROI if you were just breaking even. And we're just drawing it up to the peak. We're not also showing the retracement afterwards. So this was the first market cycle. You can see it from the halving, again, not market cycle bottom. It fairly quickly went up to an ROI of 20x. It retraced back down to say like 5 to 6x or so, and then went all the way back up to between 90 to 100x. And this is since the halving, and it took place in about a year. So you can see it's around 360, 370 days. So this market cycle and in your return on investment would have been remarkable. You would have seen almost 100x in about a year, and this is had you bought at the first halving. This dashed line it shows you essentially the price corresponding to the previous all-time high. So how long did it take to get back to that point? And you can see it took around maybe about 80 days or so. And I know that I'm not plotting ROI, but this corresponds to the ROI, to the price that it would have been to have gotten to the previous market cycle peak. Here is after the second halving. So you can see that initially we dumped off a little bit. We dropped. Your ROI you would have been losing money essentially in the short term. And after 100 days, while in this picture over here, after about 100 and say 30 days or so, you would have had 20x return on your investment. Here, you wouldn't have even seen a 2x. So we're literally talking about an order of magnitude difference, and more than that, really. So you can see how much the returns were diminished from the first cycle to the second. And this is, again, measured from the ROI versus days since the halving. You can also see that while this one peaked around 360, 370 days after the first halving, this one peaked, it took over 500 days since the last halving. So not only did it take longer, but also the ROI from the halving was less. You can see it was only about 30x or so, as opposed to almost 100x. So this is one of the things that I wanted to talk about. Now, here is the dashed line to show you what the ROI would have had to have been to get to the previous all-time high, and you can see realistically we didn't break that until maybe 240 days or so. So here it took less than 100. Here it took 240. If we continue this type of propagation, if we extrapolate, then for us to get to $20,000, which was the peak of the last halving, then maybe we would anticipate it taking another, maybe 300 to 500 days, which, by the way, would put us, somewhere between, say, middle of 2021 to late 2021, early 2022. And this is one of the reasons why I say it. This is not the only reason. So I know there's going to be a lot of people that say, well, this is a very arbitrary point. Why do you measure it from the days since the halving? Well, believe me, we have tons of videos on the channel that talk about all sorts of stuff related to lengthening cycles, diminishing returns, the diminishing macro level volatility. So please watch those before, just getting, just commenting that, okay, well, this is an arbitrary date. I get it. It's arbitrary. We've looked at a lot of other stuff to provide that evidence as well. So you can see that it took longer. You should also know, though, that the halving, there's the idea, right, behind the 4-year cycle. And of course, on this channel, we don't really support the 4-year cycle idea because I don't feel like the evidence supports it. But, a lot of people do. I respect that a lot of people do think that it could be a 4-year cycle. And because of that, I'll show you, what would need to happen in order for, the 4-year cycle to be true. How would it look? How would it compare to our current trend? Now, you also have to consider that it's not really a 4-year cycle. It's really based on the blocks, right? So if in a sense, if you think about it, the halving in 2012 happened at the end of the year. But then the halving that happened in 2016 happened in July. This one happened in May. Okay, the most recent one happened in May. So if this were to continue, then, if you just take it out, say, like 4 years, or if you just go, say, 4 years to 4 years, you're not really doing it around the halving. So by doing it around the halving, the peak would actually need to occur sooner in the cycle, if that makes sense, because the halving occurred sooner. So if it's based on the halving, if it's literally, if your contention that it has nothing to do with the halving, or if it's literally just a 4-year cycle, you think it's December of 2013 to 2017 was one, and then you think another peak will come in December 2021, then if that's the case, I want to show you what it would need to look like. So this is where we are so far. And we talked about, we said, just because we dumped during this halving does not mean we have to dump during the next one. And we didn't. In fact, we've gone up some. We went up and then we came back down to the ROI of 1, and then we've gone back up a little bit. So we could obviously drop off. And in fact, it was at this point that we did see a drop off with Bitcoin, and then it started to pick up steam over the next several years. But remember, there's not a whole lot of data. And you can't definitively say that we have to go up or we have to go down in the short term. We could easily go to 14K this summer. We could also easily go to 6K this summer. We don't know, but it's again how you respond to this price movement that's important. So let's suppose we peak in late 2021 like a lot of people think. Again, I don't think this is the case, but again, at the end of the day, it doesn't matter what I think. I recognize that. You get to a point where you recognize that, like my background, I did a PhD in engineering, and you get to the point where, you realize the more you learn, the more you realize you don't know, because there's just so much out there. In the same way with markets, though, I think it's hard to really say, to take any credence on a lot of short-term price moves, because most of the time people get them wrong. And of course, they only highlight the times they get it right. Typically, I'm sure there are people out there that are a little bit more honest than I'm generalizing it to be, but that's, I think, the general scenario. So if we were to peak in late 2021, like a lot of people think, then we would need to see something like this. In order to get to a new speculative bubble peak, and let's say it's around, say, 10x, 15x, somewhere around there, getting us to $100,000 Bitcoin, because on the halving, the price of Bitcoin was around $8,700. So a 10x from there would be $87,000. So I just put it slightly above 10x to get us to over the 6-figure mark, just for posterity purposes, so you get an idea of where I'm drawing it. Well, to get there by late 2021, then we need to get there in about 550 days. So this is again another reason why I don't think this makes sense. I mean, it just doesn't tend to follow what we've seen so far. And I get this is only 2 trends. But I would speculate that what's more likely to happen is something like this, where you see, again, the cycles lengthening and the ROI diminishing. Now, if this is true, if I drew it like this, if this is correct, then it would put us late 2022 at the earliest. And this is why I say, I think late 2022 would be kind of like the earliest it should happen, where you could say that lengthening cycle theory is true. Because if it were to happen in, say, like the first quarter of 2021, the first quarter of 2022, then that's more of a rounding error. And then, okay, this would be more so closer to, say, the 4-year cycle theory. So again, what's a few months among friends? But if we're talking about, say, a year later, or a year and a half later, or 2 years later, then there's only so much you can say that it's a 4-year cycle theory. You can maybe speculate and say that the cycle peaked in a different year, or something like that. But again, at the end of the day, I think lengthening cycle theory makes the most sense, and this is what I will at least consider to be what's going to happen. So I hope this makes sense. Now, before I want to bring up TradingView for a minute. But before I do, I want to remind you that if you guys like this content and you want to see more of it, we do have a premium list. You get a premium video every week, and you also get access to a premium report every week, as well as access to a dashboard where you can look at the live risk levels of coins like Bitcoin, Ethereum, Cardano, and we're getting a few others. I'm always developing the spreadsheet where we're adding more to it every week. This week, we added the ability to put in your projection for where you think the next cycle top will be. And we have 6 different sell strategies. And it shows you, if you follow each one, what you might expect your ROI to be. And I think this is really useful. So, this is not financial advice, but it's looking at the data science models and then feeding this in, saying where you think the bubble will peak at. And then you can see the different strategies. You can pick the one that's right for you. If you want to be more conservative, you can be more conservative. If you want to be more aggressive, you can be more aggressive. So if you want, check that out at intothe.cryptoverse.com. You just get access to the premium list. If you don't want to, it's a monthly subscription. If you would prefer to pay for more than that, you can do so. If you just scroll down, you can pay with cryptocurrency. And if you do, you can pay for 6 or 12 months and get a nice discount by doing so. So check it out. Would love to have you join. When you sign up, you'll get a welcome email, and it'll take you to all the prior reports. It'll take you to the Google Sheets dashboard, and on that dashboard, you'll also find links to the premium videos. And there's a lot of material there, so you'll have plenty of stuff to go through. And I think it's really been useful for a lot of people. So check that out. Finally, we like to pull up TradingView. I get that a lot of people just want to see the basic chart. The price right now is, yesterday I made a video talking about, say, a bearish scenario, when we looked at the 200-week moving average. As if we were to head back there, it would look like Bitcoin going to $6,000. But remember, we do have some barriers to break before that. We have the 50-week that might put up some fight, and that's currently at around $8,700 or so. And then the 20-week is at around $8,200, $8,300. So again, the 20-week is what we want to hold for the bull run to be in full swing. If we don't hold it, there's no reason to panic, right? If we don't hold it, there's no reason to panic. It just means you have more time to accumulate Bitcoin. And we've been talking about this for a long time. 2019, 2020, first half of 2021 is likely the time to accumulate Bitcoin. Not financial advice, just based on the history of the market data. So these are the years where you want to be getting it for as cheap as you can. So if you buy into the idea that Bitcoin's going to $100,000, whether it be in, say, 2021 or late 2021, or if it's, say, 2023, then if going down in the short term would be a gift in a sense, because it would let you buy in more before hopefully the inevitable speculative bubble top that will occur in a few years. So remember that, and this is why I say it's good to leave capital on the sidelines if that were to happen. With that said, there's no guarantee we drop back down. There's always a possibility that we just break through this and head up to $14,000 this summer. This is a possibility too. If you take, a lot of people draw this trend line. If you draw it from the candles to the candles, you can see that we're really flirting with breaking out there. And of course, we're going to have to, see a lot of candles, weekly candles closing above this line for, a lot of people to then FOMO into the market. But we need these people. These people are they don't, a lot of them don't buy in when the price is $3,800 or $5,000. They wait until confirmation of a long-term trend line to be broken, and then they come in. But this is important to have because it continues to fuel the market. And if you got in at, say, the market cycle bottom near $3,800, at least a few months ago, or $3,100 a couple years ago, or a year and a half ago or so, then, or I guess it's more than a year and a half ago. This would be, 2019 December. Well, no, I guess it's about a year and a half, maybe a little bit more. But this will continue to fuel the gains that you would be seeing. So this is a good thing. So again, business as usual. Stay focused. You can have capital on the sideline if you want to make sure you have the opportunity to buy in the event of a drop, and if you want to have a plan for either how to buy or how to sell. Then again, check out the premium list, and we talk through tons of different strategies. And there's a lot of material there that'll help you understand, what strategies appeal to you. So check out the premium list intothecryptoverse.com. At least subscribe to the channel so you can continue to follow these video updates. We like to provide a unique perspective on the markets. So check that out. And then also remember to check out the Telegram channel in the description below if you want to come talk about this type of stuff with almost 3,600 of your closest friends. So thank you for tuning in. I appreciate it. Again, give the video a thumbs up, and I'll talk to you guys next time. Bye.